What sort of advice would you give to someone that's imminently come into a lot of wealth?
Sit on it for a period of time. Don't get antsy. Don't get emotional. When you make emotional decisions, they tend to be poor decisions. Most people that haven't had a lot of money before, you haven't curated the skill set, traits, or beliefs in order to be able to maintain that. And I would start doing a lot of self-work or listening to people that had a lot of money and kind of try to garner some good ideas from that. In addition to it, outside of the personal development component, getting used to being wealthy and stepping into that person that you need to be takes time. If you can wait 6 months before you start buying all of the fancy stuff that you think you want, you may not want it 6 months from now. Not to say that you shouldn't have nice things, but I would look at purchasing assets that are going to be able to generate the cash flow to afford those liabilities.
Welcome, everyone. Very special show today. We have Mr. Jake Claver from Digital Ascension Group with us. His information and wisdom has captured the imagination and the eyeballs of millions in the XRP community. And it's a pleasure to have him here today to talk all things wealth preservation, all things XRP, and all things utility. So welcome to the show, Jake. It's a pleasure to have you.
Appreciate you having me. This is awesome.
Yeah, cool. Thank you. I thought we'd start a little differently. I know the audience are probably very eager to hear you talk about high price points, but I actually really wanted to get the genesis story of Jake Claver and how you personally got into the space, and more specifically, how you got into XRP, how you stumbled into it. So I'd just love to hear more about that before we get into the nitty gritty.
Yeah, absolutely. So I guess kind of starts in 2020. I was doing some M&A and consulting work and worked in industrial sales for a long time. Scaled multiple locations for a Fortune 500 company, got acquired by another company to come help them scale their business, worked with them, and then, it didn't work out the way that I thought it would, but I'd made a bunch of money while I was doing that. And when the market fell, everybody else was freaking out. And I watched my dad in 2008 skip out on buying American Airlines. He had like $100,000 set aside. And he thought, I think they're going to bail him out. It was like 76 cents per share or something a couple days before they were to go bankrupt. And may have even been lower than that. And he just didn't pull the trigger. And had he done that, he would have been extremely wealthy. He had a gut feeling that it was going to work out and just couldn't bring himself to do it. So tried to learn from that. And I had some money set aside. I was saving for a home for my wife and I. I had my 401k from my previous employer, and I rolled that to a self-directed IRA, and then took the money that I had set aside for the home, which we still haven't bought, and she gives me hell about, and put it into the market. And I rode that back up. Got lucky. I thought Facebook, Amazon, Google, Tesla would do pretty well while the world was shut down, and sure enough, they did. So those came back pretty quickly, and by May, June, things were starting to look a little frothy. They were at the same levels that I had stayed out of the market from. I went to school for finance at the University of North Texas, and really just hadn't spent much time in the market. Was getting the extra from the company while I was working there, but outside of that, really hadn't done much investing. So doubled down and just tried to learn as much as I could. And I was watching a debate between Peter Schiff and a Bitcoin guy. I don't even remember who the Bitcoin guy was, but that's when I understood this was technology. And I was like, okay, got it. Now I understand why everybody was fanatical in 2017. My brother had turned like $5,000 into almost 200 grand and then wrote it back to zero. So when that happened, I thought it was vindicated. I'm like, it's crazy internet money. It's a Ponzi scheme, but it wasn't. And so I started to do a lot of due diligence and research, and I was looking at a way to be able to divest my earnings. I doubled my money in a short period in the stock market and just kind of de-risk. And in de-risking, I ended up in crypto. So took all the money that I made there and rolled that into 13 positions that I thought were going to do really well, just based on the normal things that you would think about when you look at a corporation, the partnerships, total addressable market that they were going after. We still don't quite have utility. Still a lot of it's speculation today, but we're starting to see the beginnings of that kind of roll out here with the regulation that's on the docket. But those did really well. Made a lot of money in 20 and 21, and never, had a bunch of money before. But I'd gone to school for finance and, read Rich Dad Poor Dad and Robert Kiyosaki's books and other people. And so I knew I needed to assemble a team around myself to make sure that I didn't mess it up because I didn't have the knowledge. And so I started curating those professionals around myself, I called over 100 different firms across the US that said they dealt with crypto. And, most of them were like, yeah, we had that Bitcoin client the one time. They really didn't know much about the asset class itself or tax laws. They were just kind of working their way through it, but advertising a little bit because they were starting to get clients in that direction. But I whittled it down to the 10 to 15 people we work with today. And in doing that, I kind of curated those services for myself. And then I got on social media and started talking about, how I was mitigating taxes and setting up my estate and all the fun stuff that we do on the day to day now. And I was met with the deer in the headlights look from everybody, mostly on Twitter. And they were like, "What do you mean you can do this for crypto? It's unregulated. Who do you even have that's working with this stuff?" And so I found a niche, and there were a few people that made some introductions to some family offices that were nice enough to do that. Started consulting there instead of doing the M&A stuff that I was doing. And this has just kind of blossomed over the last 3 years here. We've got the fastest growing RIA in the world. So for those that may not know, an RIA is a registered investment advisory firm. We are the only one in the world currently that exclusively does crypto. That's changing soon. We're going to be doing traditional assets as well. But right now we've scaled from zero to over $500 million in just 10 months. 97% of that's XRP.
Wow.
So pretty cool. And anyway, it's been a wild ride, but that's kind of the genesis story of how all this got started.
Awesome. Great context for the listeners. You've obviously spoken a lot about high valuations. I'm sure a lot of the audience have seen that, and you speak about it with such conviction and nous. What do you think? By the way, I know you've answered this before, but just important for the context of the audience. What do you think needs to happen structurally or geopolitically for XRP to reach those kinds of prices, whether it be in the short term or the mid to long term?
Well, you need, similar to 2017, there was a shortage of XRP, and you saw a significant demand come for it, right? And we saw big moves. I think it was like 38,000% that things moved in 2017 into early 2018. And I think we're right on the precipice of this here. We've seen a little bit of appreciation so far in the first, actually,
it's a good day to be chatting.
Yeah,
today's
today's
all
a
time
nice morning
highs.
for it.
It's great.
But we've got some action here, and I think that's in anticipation of the ETFs coming live. But Ripple escrowed half of the supply in 2017, and that's when you started to see the uptick. So there was a shortage on the market. XRP operates on supply and demand dynamics, just like other markets do. So the only way that it's ever going to get to the high valuations that a lot of people anticipate or are hopeful for is that same situation. There needs to be a very low available supply on the secondary market and a ton of demand. And that's going to be orchestrated through what I think and what I've called the domino theory. So happy to get into that if you want a high level breakdown, you want something that's a little more.
Go for it. No, go for it. Definitely.
So the reverse carry trade will unwind. There's many different factors that could cause that to happen. But for people that may not be familiar with what that is, because Japan has not borrowed, they've loaned tens of trillions of dollars to people over the last 3 decades, while their interest rates have been almost nothing, negative at some points. You got free money, and you could take that free money and you could go put it to work in the US stock market. You could put it to work in crypto. You could put it to work in gold or bonds or treasuries and generate basically it wouldn't be tax free, but free money put to work. You're generating a significant upside. Warren Buffett, as an example, I think he borrowed $5 billion from the Bank of Japan and put that to work in a dividend paying company there in Japan that was paying 8 or 9% a few years back. And the valuation of that company doubled, and he got the dividends the whole time, and he borrowed the money to do it at almost 0% interest. So that's what everyone's done. Pension funds, hedge funds, sovereign wealth funds, governments, anybody you can think of has borrowed tons of yen from the Bank of Japan. The only caveat, and the reason that this is now a problem, is they've started to raise interest rates. And in addition to that, you've seen the appreciation of their currency significantly against the US dollar over that period. So now you got twofold. You got to liquidate your positions if you choose to do so. So you're going to get dinged there for whatever the selling fee is. And then now that you're back in dollars, you're going to have to swap those dollars for yen. So if the exchange rate is going against you in a not so great way, or maybe you've got to refinance those notes. Some people play in short-term treasuries. Some people play in long-term treasuries there for the Bank of Japan. But either way, those debts are coming due and they have to refinance them at higher interest rates. And so if you saw an aggressive move higher like we did last year by the Bank of Japan, we started to see the reverse carry trade unwind in August. There was a 13% down in the S&P in one day. And that was because people were liquidating positions as fast as they could to be able to repay those loans. I'm confident that that's going to happen again when we see a shift, with their interest rates and our interest rates. We've got them stating that they're going to continue to hike now. They felt like they've held it long enough since last August, almost a whole year, kick the can one more time. And they've got, we've got Trump lobbying for Jerome Powell to resign or step down so that he can lower interest rates significantly here in the US. So you're going to see a flood of people move from US treasuries and chase yield over there in the Bank of Japan's treasuries on the other side of this unwinding. And so what does that do? There's a flood of treasuries, US treasuries, that come onto the market. And you might think, okay, well, what does this have to do with XRP? And I'll get there. So we have stablecoin regulation here in the US that should pass on Friday. We've got the House voting for that this week.
Yeah.
And the demand that they've speculated for stablecoins, it just so happens to be about the amount of outstanding debt outside the US and treasuries that could possibly flow back here. So if you wanted to shore up that market and stabilize the debt market and treasuries for the dollar, you would need that demand to come from somewhere else. So I'm confident that we are going to see an unwind of the reverse carry trade. That demand here domestically is going to soak up those treasuries and stabilize that market. The problem that you run into is now Tether comes under fire. And I think that there may be an announcement even on Friday this week from the SEC, the DOJ, and the CFTC that goes after Tether. And I don't know what the implications are going to be. Maybe they get sanctioned, accounts are frozen, exchanges delist it. Anyway, between that and the reverse carry trade, which is going to have huge pressure on all markets, you're going to see a move down that people just do not anticipate. Everybody's in euphoria right now. Markets are at all-time high. Everybody's pumped. That's when blow-off tops happen. So I think you're going to see a big move down across the board. It's not going to matter where your money is. You are going to see a flood back to U.S. Treasuries. So I think people, Warren Buffett's parked almost $400 billion there in Treasuries. But there's going to be a lot of opportunity. There'll be blood in the streets. There'll be basically a global credit call when this happens. And we're going to need something to jumpstart this system and allow everybody to de-risk on the back end of their investments. So I think you're going to see all of these ETFs that are queued up roll out very quickly after that. BlackRock, I think, will throw their hat in the ring. They've been waiting for the lawsuit here in the U.S. to subside, which is pretty much over. We're just waiting on the SEC to remove their appeal with the judge. And everything's lined up for all these dominoes to just fall one right after the other to cause that supply shock for XRP. And they'll need it to be able to settle the back end of the stock market and de-risk from Bitcoin, which now has systemic risk. You've got, tons of banks that have levered themselves up and bought Bitcoin to be able to have the spot ETFs and provide that for people. Senator Warren, I think, actually could be right in the problems that crypto could cause, but I do think that they've, worked out how to solve this. So they'll drive a ton of liquidity into XRP from the exchanges, which will be illiquid. They'll be requiring XRP to be able to settle real time and de-risk. You've got the back end of the stock market. In 2022, Project Ion was developed between the DTCC and R3, and it's sitting there running in tandem, ready to go. It just needs something to be able to settle between all the intermediaries involved with that. And it's only going to be something that's compliant, has regulatory clarity, and enough liquidity in it to do it. So that's my thesis. I think that you're going to see a significant demand for XRP all at one time, along with um, a shortage of supply. The exchanges on the secondary market really don't have more than maybe a billion, 2 billion XRP available. And today that seems like, well, to the average person, that's a lot of money. $6 billion at $3. But to institutions, that's chump change.
Mm.
They will buy it up, no problem, if they need it. And so between all of that, I think they'll orchestrate a situation where XRP could see easily $100 or $1,000 in a not so long period of time.
And before that, that's so you're thinking this run up right now, probably off the back of just general regulatory sentiment. The big beautiful bill going through, the crypto week.
Mm-hmm.
The global M2 money supply going up. We're starting to just get the gurglings of the supposed next bull run leg up. You think this will sort of carry out through to probably back end this year once rates change and get cut, which I've also been calling for, since late
Yeah.
last year. Trump will put a lot of pressure on the Fed, um, and then off the crash, or I guess
Mm-hmm.
the what would be conventionally called the beginning of the bear market. That's when we're going to start to see those dominoes fall.
I do. I think it'll be a V bottom out of there, and I don't know that XRP is as affected by this as all the other assets, and that's why I'm positioned there. Um,
Yeah,
if uh, if they do roll the ETFs and drive, that supply shock while everything else is going down, um, you could see a big move to the upside. And it won't be a slow progression. It has been to this point. We've kind of been eking up here close to all-time high back at 330 this morning. But I do think that's anticipation of one, like you mentioned, regulatory clarity, settlement of all these stable coins. And then in addition to that, the ETFs that are going to go live, they're stacking positions. This is institutional volume that's coming in to the market. It's not retail that's driving these prices.
yeah. Yeah. And just a quick one side note on this process, because like I went over to Apex in Singapore and listened to a lot of the devs speak, and there's some good special speakers from some banks. And this whole premise around T2, T3 transaction times, and obviously the uniform push to try and get us towards, T0.
Mm-hmm.
But then, I was chatting with a friend this week. He pulled up documents from State Street showing that, they've been given grace till 2027 now to move a lot of their messaging standards,
Mm-hmm.
ISO messaging standards, in certain realms. I'm certainly not technical enough to talk about exactly what ones they've been given grace on, but it seems to me, and from the speakers I listen to as well, there still needs to be a real strong catalyzing event to accelerate the reaction to the problem. Otherwise, just on paper, it almost seems like we are still 2 to 3 years away from getting to T0 across the board. How do you sort of unpack that and see? I know you just given the domino
Yeah.
theory, and that makes sense to me. But do you see that the same way?
I do. We need a catalyst here in order to drive. Otherwise, like I mentioned, no, retail is not going to be able to drive this to the levels that I talk about. If you just had the ETFs, maybe we do see that 10 to 13, $20 level that a lot of people discuss. But for XRP to move value for Swift and the back end of the stock market and many other markets, and it may be a fragmented approach where some of these implement it before others. And that's how you kind of get steps up in the price there. But I'm with you. There needs to be some urgency that's brought to the surface. Otherwise, we've already seen that they're going to kick the can and kick the can and kick the can. These institutions and banks and enterprises, once you get to a certain size, it's difficult to be agile and swift in your implementation of anything. And it does take periods of time to roll that out across your corporation. We did see Fed Wire go live here in the US on Monday,
Yeah.
which is in correlation to ISO 20022, like you mentioned. It's a messaging standard that basically allows banks and everybody else to communicate effectively, and it's a prerequisite to instant settlement. The back end of the stock market last year on May 28th in 2024, they moved to T plus one with the option to settle real time through a digital asset. when they rolled that out. So that I think is going to be one of the main pieces in the short term that does drive the valuation higher. If there is a systemic event across markets that requires them to de-risk from positions, and this is the other piece, if it happened over a weekend, that could exacerbate it for them. So because the markets are not open on the weekend, if you saw a 50, 60% drawdown in Bitcoin, which is not uncommon in a bear market, especially if we saw implications for Tether, it would definitely be affected. And then, they would need a way to be able to trade and de-risk from those positions before realizing those losses. And so maybe that's what will be orchestrated. It may end up being over a weekend, but I know a lot of people talk about Swift and, XRP settling that and Ripple. I don't know that Ripple is going to get, Brad Garlinghouse said recently that, by the end of the decade, he thinks that Ripple will have like 14%.
I filmed that, by the way. Everyone
Did you
ripped it
really?
off. Yeah, I was in Singapore
That's
with him.
awesome.
He's actually a lovely guy. Really, really nice guy.
I love Brad. He always takes time and chats with everybody. He's exactly who you'd want as the CEO of a large corporation like that.
Yeah.
So with that though, I think R3 may end up winning out for Swift. They really don't have many options for instant settlement. People don't really listen or think about R3. Most people, when I talk about that company, they haven't heard much about it since maybe 2020 at the latest, probably 2019. And that's really kind of when they finished the build out and the implementation of all this stuff. It's been sat here ready to go for a long time. But to your point, I think they need a catalyst to get it where they can use it.
It does. It makes sense. Shifting gear slightly, what do you feel is the most unique feature of the XRPL when comparing it to the other major players in the space?
I mean, there's a lot of things. But if I had to pinpoint one thing, I would say that the origin account is black holed. So there's no counterparty risk with this asset, which makes it very unique, along with the fact that it is actually deflationary. So nobody can freeze your XRP. They can blacklist your wallet and not accept it from you, but nobody can sanction your XRP and freeze your wallet. There's no centralized party that controls the asset itself. Issued assets, sure, which you would want. If you wanted banks and governments and corporations to adopt your asset or your network and issue assets on it, they need oversight. They need the ability to claw those things back or freeze those assets. But there's no counterparty risk with XRP. So right now, the counterparty risk is the U.S. government. You've seen, the BRICS nations want to move away from the dollar. But after we sanctioned Russia, it was a pretty big deal when we did that. And they've backed their currency with gold now. And you've seen China and many others move away from the U.S. dollar. So they're looking for an agnostic, non-centralized asset for a medium of exchange. And I think that's one of the reasons that this is going to be adopted at scale is because the origin account was black hole, there's no counterparty that can issue more of it or take it away from you or freeze your account if you're transacting on the ledger.
And what's the most surprising thing that you've learnt from helping clients protect their wealth?
I think there's a misconception that a lot of people have that people in crypto are all young. I would say that our average client is somewhere between 40 and 70 years old. And
really?
They have, yeah. See, that's what I'm saying. Like you were like, that's probably true. No, it's the majority of our client base is older. They have children. They want to protect their estate and their assets. They understand the benefits that come along with an advisor and professionals around yourself. People that are younger, not to say that they don't see the benefit there, but maybe they don't have those additional components to their life. They don't have a spouse or children, or maybe they haven't realized their mortality yet. And so they think they're going to live for forever. And my cold wallet's fine. I have access to it. I don't need backup situations. If my spouse doesn't know about it, then, she'll figure it out. Or I've got a crypto buddy that's in my will that'll make sure that my family's taken care of. Hopefully people have thought through at least some of those precautions if you have dependents and other people that rely on you. But that's probably been the most interesting thing to me is there are a lot of people that are older that you would think would be risk adverse that have really taken the plunge and made some pretty significant investments in this asset class.
That kind of dovetails nicely into the next question, which is you've obviously worked with a lot of high net worth individuals. What separates those who preserve their wealth properly from those who are losing in this age? You know, that could be present tense and also future tense, really, as things shift.
So getting rich, I don't want to say is easy, but there are many people that make a lot of money in whatever they're doing. It's a completely separate skill set to maintain that wealth over generations, and that's why family offices were established. It's a governance model that allows you to set up structures and guardrails for your family and how they participate with that wealth to make sure it is maintained and they are good stewards of that capital and those resources over an extended period of time. And if you don't have good professionals around you or a team around you, this is very difficult to see everything from all angles and understand it all. And you have the resources to be able to pay for those individuals, right? So, as an example, most family offices cost somewhere between 1% and 2% of the AUM per year to manage the assets and make sure that they're growing at a rate that's more than inflation. So, most of the time, you're looking to capture somewhere between 10 and 12% return on your total portfolio on an annual basis. And in doing that, you need good people. Otherwise, like let's say you make a tax mistake or you misfile something or you're in a business transaction and you did not set up the entities correctly and there's a lawsuit. It's very easy to make a 5% mistake. And that's not a big deal. I mean, it is, it sucks if you had $1 million and you lost 50,000, right? Like that's not fun. But it's not the end of the world. But if you got $100 million and you lose 5 million, you could have paid, all of these professionals and other people to make sure that you're mitigating that risk and also grow your wealth over that period. So that's why most family offices really don't come into existence until people have more than 100 million, because up to this point, that's where it's been economically feasible and starts to make sense on the risk to reward. We kind of reduce that, so we work with people that are around 20 million or more, mainly in digital assets, and a 5% mistake and for 20 million, still $1 million, and that's meaningful. And so we provide and curate services around, digital assets when people start to reach that amount. But that would be what I would say is one, they've curated a team around themselves to make sure that this is set up correctly and it's long lasting. And then the other thing I would say would be their beliefs around money and the skills and traits that they have. Most people that have grown up with a certain paradigm that money is bad or that it's not for them and they're just going to be poor for forever, they carry that forward, even if they do come into a significant amount of wealth. And Jim Rohn says it's best you become a millionaire before you get $1 million. Because if you don't have the mindset and the beliefs of that type of person, it'll leave just as fast as it came. You see 70% of lottery winners go bankrupt within 3 to 5 years. And if they don't lose it there, then the next generation, within 3 generations, it's kind of the adage where the money is lost. Vanderbilts are a great example of that. And you could probably think of many others where one person came from nothing, did very well, and within 3 generations, that money has left them and gone somewhere else. So curating the governance and the rails and the professionals around your assets, I think that that's a really good way to make sure it's going to be maintained in the future.
Mm. So you touched on a fair few mechanics there, which was going to be one of the next questions. And say I wake up tomorrow, the dominoes have started to fall.
Yeah.
I have 20 million bucks in the bank. Well, not the bank, in my cold wallet in value. I come to Digital Ascension Group, to you. Mm-hmm. Walk me through that process and you've talked a lot about what's really interests me is I'm waiting for a time with my assets personally where I can give them to institutional custody with the insurance wrapping that you've talked mm-hmm. about through your third-party partners. Like, I would love for you to unpack that process mm-hmm. for the audience from me meeting you and have just become, a multi.
Yeah, if you've stepped into that position, ideally you've already done some prerequisite work and moved your assets into an entity. But if you haven't, we can work on it then. It's not like it's a problem. You're you're there in Singapore.
No, I'm in Cyprus at the moment, but I'm from Australia, so
Okay.
yeah. But
Well,
I probably, yeah,
Aussies definitely need to be proactive and move stuff into a family trust or offshore to be able to mitigate taxes, because that's going to be your biggest expense. Just candidly, is
yeah.
the government is going to try to take your money. So um, first thing we do is we set up a family constitution. So what is your goal with this money? Where do you want to be? How do you see it being used? Because that's going to drive the direction of everything else. If, let's say, if you have completely, you're completely philanthropic, you probably don't need an LLC. You might, if you want to manage a portion of that over your lifetime, or maybe a trust to manage a portion of it over your lifetime. But maybe you want to set up a foundation and do a lot of good. So you might be attempting to gift a lot of those assets out of your taxable estate into that foundation that you set up. So foundations can take anywhere from 3 months to 12 months to establish. It's not a short process. Um, but again, we start with that mission statement, core values, principles, what's important to you and how you want the money to be used. And then based on that, we have a bunch of different directions we can go. 90% of the time, 95% of the time, that is setting up some type of holding company that manages the assets. Oftentimes, it will incorporate a trust in some jurisdiction globally to be able to own the equity in a portion of those assets, to be able to pass on to your beneficiaries or the foundation, or whatever your other interests or long-term goals are. And then, if you did want the institutional custody, we do provide that. So we work with Anchorage Digital. They are an OCC regulated, federally chartered bank here in the US. They're currently the only people that have that license. Ripple's hot on their heels. We'll see if they get it or not. I think they will. And we do, segregated bankruptcy remote insured accounts, like you mentioned. So if you got 20, 50, $100 million on a cold wallet, like, what if you lose the keys? What if you die? Like, there's just the more money that's there, the higher the risk that it is. And ideally, you would want some fail safes, and especially if it's inside of a trust and you've got a distribution trustee, because it's an asset protection trust, probably have multiple signers on that account. And the old school way of doing that, if you have a cold wallet, is you write down the seed phrase and you tear it in half and give them half of your seed phrase. And you have to reconstitute the wallet anytime you want to do something. Because they've got to check to make sure you're not paying off creditors. And that's the protection that you get. It makes it very difficult for people to come after your assets in that type of trust. So we set that up there at Anchorage. We do have a couple different ways that you can generate returns on your XRP. We're actually going to be paying out the first dividend from our hedge fund next week, about a little less than 2% for the first quarter that people participated. So that'll be some jingle in their pockets, some cash for not doing anything, mailbox money for the people that work with us on their XRP. We also have lines of credit that you can pull against your XRP that are interest only with a balloon payment at the end. Multiple partners that facilitate that, and hopefully a big one that people will be excited about in the near future. And then we also have insurance, right? So that's always a component, depending on where you are in the world. The US is interesting in the way that they've involved financial products with insurance. It's not necessarily available globally, but you can always go offshore into British Virgin Islands or Bermuda or Caymans. There's a lot of places globally that you can establish, PPLI, which is private placement life insurance, and you can fund that type of policy to be able to borrow against it and have those assets flow back to your family or your trust on the other side of passing. But it always starts with that mission statement, core values, and then we kind of go from there and work with our professionals to build out, what the best path forward is for you and your family.
And are you more exclusively US, or do you have Australian clients, for instance?
We do. We have people all over the world, which is wild. I would say 80% of our client base is domestic here in the US. About 20% is international, Canada, the UK, Dubai, UAE. We've got a few people in Southeast Asia, Australia, and then a few in South America as well. And we partner with professionals in each one of those jurisdictions to be able to curate, the tax and accounting and the estate planning that would be appropriate for somebody that lives in those areas.
Wow. Okay. Because I mean, yeah, the Australia thing's very tricky. A lot of the stuff I think you've talked about that obtuse charity setup that you can do in the US.
Hmm.
I can't remember the exact name of it. What was that called again?
Is it a charitable remainder trust, or are you talking about a foundation or a donor advised fund?
There's
Uh,
yeah, probably too many options.
there's a lot of
But
different charitable vehicles that you can orchestrate. Yeah.
yeah. But as I think from my research in Australia, it's a bit more. There's not really any charitable routes that would yield the same results as the US. However, it's really cool to hear you work with Australians because I mean, personally, I'm at the point now where I'd be very open to exploring getting these safety rails in place for what's coming. So it's cool. I might have to have a chat with your team after
Yeah. Love
after
to.
this. But
You have a self-managed super fund, or what do you got over there? Well, I guess you don't have to disclose that, on the
uh,
podcast. We talk about it.
yeah, no, I'm I don't actually have much super at all, really.
Okay.
So yeah, no, I've always kind of done my own thing and kept it out of that.
Well, they got 30% unrealized capital gains on it now.
I know
So
it's
probably
not good.
good idea.
It's,
Good
hence
choice.
why I'm in Cyprus because a lot of Aussies have come here to try and get away from things. But we'll chat about that offline. I'd love to have a chat with you and the team. Um, very cool. So another little question we got here. I've heard you talk about this before. I think it's apt given the timing. So, what sort of advice would you give to someone that's imminently come into a lot of wealth?
Sit on it for a period of time. Don't get antsy. Don't get emotional. Um, when you make emotional decisions, they tend to be poor decisions. Um, Most people that haven't had a lot of money before, again, you haven't curated the skill set, traits, or beliefs in order to be able to maintain that. And I would start doing a lot of self work, or listening to people that have had a lot of money, and kind of try to garner um, some good ideas from that. And then in addition to it, outside of the personal development component, getting used to being wealthy and stepping into that person that you need to be takes time. If you can wait 6 months before you start buying all of the fancy stuff that you think you want, you may not want it 6 months from now. Not to say that you shouldn't have nice things, but I would look at purchasing assets that are going to be able to generate the cash flow to afford those liabilities. So, if you want a nice home, maybe you wait an extra 6 months, you buy a multifamily piece of real estate that generates, $100,000 a month. So that's enough for you and your family to, service the debt on whatever you borrowed for that property. In addition to having an extra 20 or $30,000 in cash flow, you can use the cost seg, at least here in the U.S., to be able to offset that income, and then save for 6 months off of that property, and then put the down payment on the house that you want. And now you have a cash flowing asset that's appreciating, servicing its own debt, that covers your nut every month or whatever you need to cover your home. Same thing with exotic cars. Maybe, and it doesn't have to always be in this exact lane, but like maybe buy a car wash for $500,000 or $750,000 instead of dropping that half mil on the car. Now you have something that cash flows, $3,000 to $20,000 a month. Obviously, there's additional overhead and other things that go along with that, but you have write-offs. Now you have a business, and that's going to cash flow and be able to service the debt on whatever lease you want for that nice vehicle, which you could then write off against the business also.
Mm,
So just being strategic, and people know this inherently. They know that the wealthy, own nothing and control everything. They set things up that way, and then in addition to that, they've purchased a bunch of assets that cash flow, where they can be able to offset their taxes, and then they live off the additional income from those businesses or assets to be able to fund their lifestyle. So, not that you hadn't made, like, I think we're here. I think we're going to see some pretty nice numbers. But people that get antsy and sell quickly and make rash decisions could put themselves in a worse position and again, like if you accumulate a large estate and all these vehicles and all these liabilities, those all take money out of your pocket. They're not assets, and they may, hold their value, like nice watch or a nice vehicle if you're purchasing the right one. But over time, you're going to continue to deplete that cash that you saved up if you're not smart about it.
Mm. Good little shift into and off that notion into the most popular off ramping strategies slash methods you've encountered with your clients.
We had this call or had this question on the live I had last night. So this gentleman asked me, "You got $20 million. What's the best way to off ramp it?" Ideally, you already have a corporation or something you've established and you have banking history. Because if you just move $20 million into your personal bank account from a crypto exchange, I don't think it matters where you are in the world. You're probably going to get flagged. There's going to be some issues with that, and they may end up freezing your accounts. So just be aware of that. You're excited again, but if you can wait 6 months and establish some things and build rapport with other institutions and not move quite as aggressively, I think you're better served in that capacity. But in addition to that, you're going to want to, coordinate with an OTC desk or a large broker. You guys have Caleb and Brown. They're in Australia. They are a good option. They're a bit pricey on the take. When they liquidate for you or make a trade, I think 3.5% is a little egregious in my mind. There are other options, Kraken and others that are more reasonable, 1% or less. So let's say you liquidated, $1 million. If you did it through Caleb and Brown, it's going to be 35 grand that they're going to make. And I'm not shilling our own service, but if you did it with us, it's 20 basis points with no spread, so it's only $2,000. So pretty, yeah,
wow, on a
pretty,
million,
yeah, pretty significant difference there.
Wow. And that process, just so the I guess the more layman can understand, is because look, this space is much, it's new to me as well. This kind of guardrailing and thinking about the off ramping. I come to realize this money, it's in my cold wallet. I might move it to like a exchange or something, a portion, switch it into USDC or whatever. Because this is one route I'm thinking of. Do I just send you the USDC and let it sit with you, or are you saying I give you the asset, then you just liquidate the asset? Is there differences there? Is there something that's more preferred with your clients?
I mean, we have people across the board, so we do large purchases and sales. Just depends on what they're needing. If people want to liquidate a position, we move it into their account there, and it can be in a stable coin or it can be in cash. Anchorage does not have a full scope of banking services yet. We're working on curating partners to be able to facilitate that, so we can establish bank accounts and do private banking. But again, with it being crypto, Chase and a few of the other people are hesitant. I think that'll change once we get regulation. I think it'll flip. It'll be a 180. There'll be lots of people that are happy to do it. But we'll be able to wire that wherever you want it to go, or you can sit it in USDC on a couple different platforms and earn returns there. I think Coinbase pays 4.5 or 5%. We have a relationship with them, so we could park it over there at Coinbase and generate returns on just the cash if you wanted to do that. But yeah, you'd hold the asset with us. When you work with us, we set up your own wallet. So you have an FBO account, or for the benefit of, underneath our account there at Anchorage. Your assets are there. You can see them on chain. And when you wanted to liquidate, we would just, reflect those assets on the exchange side, make that swap, and then move the cash over there and move the assets out to their side. They have a pretty robust infrastructure that's, again, bankruptcy remote and segregated, so their exchange side of their business is separate of the custody side, but they're able to reflect those assets on the other side in order to be able to make transactions because it's same company. And many others are like that. Zodia, there's still some friction. Like if you wanted to, reflect your asset or your balance, say on Uphold from our vault, Can't do that yet. They're not interoperable with Copper Clear Loop or other things, but that is coming. And that'll be one of the cool things is you'll be able to represent your assets other places without ever having to move it out of institutional custody. So we've already orchestrated that with some of our partners, and that's how we remove any counterparty risk on loss of your XRP when you park it with us. If you put it in a smart contract, you're at risk if that smart contract gets hacked. Hopefully they have some insurance on the smart contract like Nexus. But if it's in institutional custody and you can just reflect that balance with somebody else and execute a trade or draw a line of margin against it, and that's put to work in the strategy, that's how we generate cash flow and returns for our clients without ever having to move their assets out of institutional custody.
And you think with so the stable coins is just at that 4 to 5% mark. When XRP reaches those higher prices and it's more stable, less volatile, like what do you think the staking future looks like for XRP and the popularity of that and how that kind of space will open up in the, I guess, midterm?
I've had Hugo on my show and got to chat with him about FXRP and wrapping it and putting it to work in their system. I think there's a future for that. I know that's a term that most people are used to in digital assets is staking. We are looking to curate products with a specific partner that will act more like a CD or a money market for your XRP. And the returns on that, I think somewhere between 1 and 4% per year, just sat, be able to earn interest on it without ever having to move it with us. Very low risk.
Gotcha. 2 fun ones to finish up. These are follower questions. Will Bitcoin go to zero?
The answer is I don't know. I'm leaning. I'm 75% zero, 25% a million.
Wow.
That would be where I'm at on the bell curve on which way it ends up going. I think with Tether and the implications that you're going to have there, and then the systemic risk that it has at this point, we've also seen there's like 14 wallets start to move Bitcoin that haven't been active since 2010.
Yeah,
large balances.
Brought all that up. He just got banned today. Ido Farinya.
Oh, really?
They shut his account down.
Oh, wow.
So I guess that shows you something, doesn't it?
It does. So I think there's a potential that Satoshi's wallet might wake up. It's got 1.1 million Bitcoin in it. And if you saw that account divest, it could be a cascade, kind of a run on the bank type situation where people look to move very quickly. Maybe that won't play out. Maybe all of that Bitcoin just continues to stay held where it is and things persist and cycles move on and they mine the last Bitcoin in 2140, it just seems like if you wanted to put something in position to cause a big problem, they've done it. And so my spidey senses are tingling. I'm leaning towards zero if I had to pick one or the other.
Wow. And in closing, what is your favorite XRP riddle or piece of lore in the community?
I really love 589. I follow 589 there on Twitter. There's a lot of meaning behind that. You watch a whole lot of not financial advice and that gentleman's content.
Yeah.
That's icing on the cake for me. And it also gives me additional conviction. There's no other community that has that type of lore or riddles. A lot of it makes you think, right? And there's definitely been things in looking at that I've uncovered that have drawn my attention. One that I mentioned, well, I haven't ever mentioned this publicly, but Bearable Guy put out the photo, he does every year on close to Christmas. And we're almost at Christmas on the harmonic calendar, which they referred to a couple times. But he had a clam with the pearl headed toward the harbor.
This was this most recent one, yeah.
Most recent one, yeah.
Yeah.
And I didn't see anybody come out with Pearl Harbor. But with the dynamics between the U.S. and Japan, it makes a lot of sense that that was some
Oh,
foreshadowing of the reverse carry trade and those dynamics. So um, I've probably spent too much time looking at a lot of that stuff over the past 5 years. Um, there's another account that I've mentioned before that I follow on Twitter. That's Merlin XRP. Um, I think that may be Arthur Brito, just based on what I've seen from that account over the years. So, and then he also commented on one of my recent posts and said nothing happens until something moves, um, which alludes me to again think about that Satoshi's wallet for the 1.1 million Bitcoin. If somebody really does have access to that and they were to move those funds, it would cause some a stir for sure.
well, you should watch this. It's on YouTube. Ito did this full investigation with this third party company that are like experts in tracking wallets. They use some sophisticated software to do it, and they basically unequivocally proved that the 1.1 million Bitcoin in that wallet is kind of falsified. They've been running in the
Interesting.
background these unknown algorithms to create tons of like hot wallets to shift Bitcoin around. And that's when we got the flag of the 80,000 last week. But they dug deeper into that and figured out basically that there's something untoward happening to the point where no one even knew that this was possible in terms of wallet creation and wallet moving without it being visible. So basically, there's been movement going on. No one thinks there's movement, but there is. And I've probably done a bad job of articulating it. Go
Would
check it out for
be
yourself.
like
But
a
it
layer
is,
two, like the Lightning Network, and then they've kind of like it's
I don't
something
know.
else.
You'd
Interesting.
probably you if you watch it, you'll probably get it better than I do. It's more
Okay.
technical, but it's super illuminating. And yeah, you talk about spidey senses. I think he's also shown that they moved at least I think 10,000 to OTC just this week from these wallets.
There's large whales liquidating into the volume for the ETFs. There's been a lot of people that have sold here. And I mentioned in a comment the other day that I thought we were close to the local top or the total top of the cycle for Bitcoin. I got a lot of hate for that. And I did miscall it. I thought maybe 75K would be the top, and we've moved far beyond that. So I'm not the source on that, but it's interesting to me. I do think that there's a day of reckoning coming. It's just weird that you would see those wallets wake up
Yeah,
um, now versus why not earlier, you know? So,
it is. It is. It's wild. And then the fact that he got censored today, he got banned on YouTube, banned on TikTok last week, got him back, and now X have suspended his account for that
oh, wow.
video. So he's pressed a nerve somewhere.
Yeah,
Um,
somebody's not happy.
yeah, crazy. But look, Jake, it's been terrific chatting. Thank you so much for your time. Everyone listening, you've heard the message from the big fella himself. You've got to get the guardrails set up and at least be thinking about these things if you've got good positions in place. So I certainly know I am going to be more stringent in setting all this up in the coming months. So it's been a pleasure having you on. Go give him a follow on. You're just Jake Claver. I think I've tagged you in my story anyway. I'll tag you
Yeah.
again when I post it. But Jake Claver on Instagram, X, and YouTube.
Yeah. Beyond broke, beyond underscore broke over there on Twitter.
Okay,
But everywhere else is Jake Claver, YouTube, and all the others you mentioned.
awesome. It's been an absolute pleasure, Jake. Thanks for coming on. And yeah, let's enjoy this run up and the dominoes. Let they fall sooner rather than later.
I think so. Appreciate you, Nate.
Cheers, brother. So stop.